In a dramatic turn of events, Argentine presidential candidate Javier Milei has found himself embroiled in a crypto Memecoin scandal just days before a crucial trip to the United States. The political newcomer, who has attracted global attention for his unorthodox views and libertarian economic policies, is now facing intense scrutiny over his connections to a controversial cryptocurrency project. The timing of this scandal could have significant implications for Milei's political ambitions and his efforts to position Argentina as a beacon for free market policies. Milei's foray into the cryptocurrency space began with the launch of a new Memecoin, which rapidly gained traction, initially boasting a market capitalization of around $15 billion shortly after its introduction in January 2025. However, the excitement has since faded, with the coin's market cap suffering a staggering decline. Critics have pointed to the inherent volatility of memecoins, often perceived as speculative assets with little to no intrinsic value, as a troubling aspect of Milei's financial maneuvers. As the dust settles from the initial hype, questions about the sustainability and ethical implications of such investments have come to the forefront. The controversy surrounding Milei's Memecoin is exacerbated by his upcoming trip to the United States, where he aims to solidify relationships with potential investors and political allies. Observers have noted that the scandal could overshadow his efforts to promote Argentina as a hub for cryptocurrency innovation and investment, undermining his credibility as he seeks to attract foreign capital. Milei's reputation and the perception of his political platform will be tested on this trip, said one political analyst. If he can't navigate this scandal effectively, it could derail his momentum. Meanwhile, Milei is not the only political figure making waves in the crypto world. Former President Donald Trump has also embraced the digital currency landscape, positioning himself as the crypto president. Trump's recent ventures into cryptocurrency include the launch of a meme coin and partnerships with various crypto-related enterprises. While these moves have garnered enthusiasm among his supporters, they have also drawn criticism for potentially exploiting the political landscape for personal gain. Trump's foray into the crypto space raises questions about the intersection of politics and financial speculation, particularly as the industry seeks to gain legitimacy and mainstream acceptance. The broader crypto landscape is currently in a state of flux, with industry leaders calling for clearer regulatory frameworks. As the Biden administration grapples with the complexities of cryptocurrency regulation, the crypto community is eager for decisive action. Time is critical, remarked Ji-Hun Kim, president of the Crypto Council for Innovation, during a recent congressional hearing. The crypto industry, emboldened by its political investments, is keen to solidify its influence and secure a favorable regulatory environment. Looking ahead, the outcomes of Milei's trip to the U.S. and the ongoing developments in crypto regulation will likely shape the future of digital currencies in both Argentina and the United States. As the political and financial implications of these events unfold, stakeholders from all sides will be watching closely to see how the evolving landscape will impact the crypto industry's quest for legitimacy and acceptance. The coming weeks will be pivotal, and the interplay between politics and cryptocurrency will continue to capture the attention of investors, regulators, and the public alike. Bitcoin has recently made headlines by surpassing the $100,000 mark, a milestone achieved on December 4, 2024. Shortly after Donald Trump's re-election as President of the United States. This significant leap in value, which saw Bitcoin surge approximately 45% within a month, has raised questions about the cryptocurrency's future trajectory and the potential for further gains. By January 20, 2025, Bitcoin reached an all-time high just shy of $110,000, prompting renewed enthusiasm among investors and analysts alike. The journey to this remarkable price point has not been without its challenges. For much of the first half of 2024, Bitcoin's price fluctuated between $60,000 and $70,000, leading many to doubt whether it could ever breach the six-figure threshold. However, as the U.S. election drew closer, optimism grew around a potential Trump victory, which many believed would usher in a more favorable regulatory environment for cryptocurrencies. Following Trump's win, Bitcoin's price skyrocketed, reflecting not only a reaction to political events but also the growing institutional interest in digital assets. Richard Teng, CEO of Binance, noted the significance of Bitcoin's market capitalization, which surpassed $2.1 trillion, placing it among an elite group of assets. With talks of a U.S. strategic Bitcoin reserve and more companies adding Bitcoin to their corporate treasuries, we are on the precipice of true mainstream global adoption, he remarked. This sentiment was echoed by Jeff Kendrick, global head of digital assets research at Standard Chartered, who emphasized the institutional inflows that have propelled Bitcoin to its current heights. Several factors have converged to create a bullish environment for Bitcoin. The easing of inflation and interest rates, alongside changes in political and regulatory frameworks, have bolstered investor confidence. The approval of multiple Bitcoin spot exchange-traded funds ETFs in January 2024 has also played a critical role in attracting institutional capital. For instance, BlackRock's recent acquisition of $662 million worth of Bitcoin for its ETF highlights the increasing institutional demand, which has been a game-changer for the market. Moreover, companies like MicroStrategy, now simply referred to as Strategy, have also made headlines for their aggressive Bitcoin accumulation strategies. Founder Michael Saylor has been vocal about his belief in Bitcoin's continued ascent, claiming "We are going to Mars," as his firm continues to bolster its holdings significantly. Reports indicate that Strategy had completed $20 billion of its capital plan aimed at purchasing Bitcoin, emphasizing the company's commitment to the digital currency. The political landscape, particularly Trump's pro-crypto stance, has further fueled expectations for Bitcoin's price to continue climbing. The recent rescinding of Staff Accounting Bulletin No. 121 by the SEC has made it easier for financial institutions to engage with cryptocurrencies, potentially leading to more widespread adoption. SEC Commissioner Hester Peirce's formation of a new crypto task force underscores the administration's commitment to developing a clear regulatory framework, which many believe is essential for Bitcoin's future growth. Looking ahead, analysts predict that Bitcoin could reach astronomical heights, with some suggesting targets as high as $300,000 in the current bull cycle. Gert van Leegen, a prominent crypto analyst, points to bullish chart patterns that indicate an imminent price surge. Current market conditions, combined with institutional interest and a supportive regulatory environment, suggest that Bitcoin may soon embark on another upward trajectory. As the cryptocurrency landscape evolves, investment firms are increasingly viewing Bitcoin as a legitimate global financial asset. Franklin Templeton's outlook for 2025 emphasizes a shift from speculation to utility, highlighting the growing integration of cryptocurrencies into global financial systems. With influential players in the financial sector advocating for Bitcoin and the potential for further corporate and sovereign adoption, the coming months could prove pivotal for the cryptocurrency's journey. In summary, Bitcoin's recent ascent to over $100,000 marks a significant chapter in its evolving narrative. The combination of institutional demand, favorable regulatory changes, and a supportive political climate positions Bitcoin for potentially unprecedented growth. As we move further into 2025, all eyes will be on the cryptocurrency market to see if it can sustain this momentum and reach new heights. In recent years, Donald Trump has taken on an unexpected and unofficial title, the crypto president. Once a vocal skeptic of cryptocurrencies, he has astoundingly pivoted to embrace digital currencies, positioning himself at the forefront of this rapidly evolving sector. With promises to create a crypto-friendly environment and establish the United States as the world capital of digital assets, Trump has intertwined his political aspirations with ventures that not only support the crypto industry but also enrich his family's financial portfolio. The transformation in Trump's stance is particularly noteworthy, especially considering the significant financial backing he received from the cryptocurrency sector during his recent presidential campaign. However, this relationship has been met with mixed sentiments from industry insiders. While many view his ventures as a potential boon for the market, critics argue that they exploit Trump's influence for personal gain. In a bid to distance himself from potential conflicts of interest, Trump has placed his investments and assets into a trust managed by his children, pledging not to manage his companies during his presidency. A closer look at Trump's crypto-related ventures reveals a landscape bustling with activity. One prominent example is the Crypto President Tourbillon watch, available at a staggering price of $100,000. Limited to just 10 pieces, the timepiece features 229 sapphires in the shade of Bitcoin signature orange and comes with a letter of authenticity personally signed by Trump. As the watch's promotional material suggests, it is not merely a luxury item but a symbol of wealth and power, an assertion of influence in a market characterized by volatility. Trump's foray into the crypto space does not end with luxury watches. He has also launched a Memecoin, which experienced a meteoric rise to a market cap of approximately $15 billion shortly after its launch. However, the excitement was short-lived, with critics pointing out that the decline in value reflects poorly on the crypto industry's quest for legitimacy. The Memecoin, alongside a similar product launched by First Lady Melania Trump, highlights the contentious intersection of politics and cryptocurrency, where projects often lack substantial backing and can be perceived as gimmicks. Moreover, Trump's ventures extend to the fashion world, with the introduction of crypto-themed sneakers priced at $100 each. The limited run of 400 pairs is yet another illustration of how the Trump brand is being leveraged in the digital asset space. This alignment of high-profile merchandise with cryptocurrencies could potentially attract a new demographic of investors, but it also raises questions about the sustainability and ethical implications of such marketing strategies. In a broader context, the crypto landscape is being shaped by significant investments, including one from Chinese entrepreneur Justin Sun, who has reportedly invested $50 million into World Liberty Financial, a decentralized finance platform associated with Trump and his sons. This partnership highlights the growing global interest in cryptocurrencies, as well as the controversies surrounding Sun, who has faced legal challenges in the United States for allegedly inflating cryptocurrency prices. Trump's media company, Trump Media and Technology Group (TMTG), is also making strides into the crypto arena, with plans to invest $1 billion in new crypto products, including exchange-traded funds ETFs linked to Bitcoin. Despite TMTG's current financial challenges, including substantial losses, its stock price has been buoyed by the enthusiasm of Trump's supporters as the company aims to diversify its investment portfolio. As Trump continues to navigate the complex and often tumultuous waters of the cryptocurrency industry, the implications of his ventures extend beyond personal wealth. They represent a significant shift in how digital assets are perceived in the political realm and raise critical questions about the ethical dimensions of intertwining political influence with financial interests in emerging technologies. Looking ahead, the intersection of cryptocurrency and politics is likely to evolve further as more influencers and political figures recognize the potential benefits of engaging with this disruptive technology. Whether Trump's ventures will contribute to the overall legitimacy of cryptocurrencies or serve as cautionary tales remains to be seen, but one thing is clear: his role in the crypto narrative is far from over. As Ethereum endeavors to reclaim its footing amidst a sea of bearish signals, the cryptocurrency's recent price fluctuations have left investors and analysts alike questioning its trajectory. Trading at approximately $2,774, Ethereum ETH has seen a modest uptick of 2% in the past day and 4% over the last week. However, a critical resistance level looms ahead at $3,036, with many market participants speculating whether ETH can muster the strength to break through or if it will succumb to further declines. Since mid-December, Ethereum has struggled to maintain momentum, falling from levels above $4,000 to its current position. The circumstances surrounding this downturn have been compounded by a failure to stabilize above key moving averages, specifically the 50 and 200-day averages. A notable price drop on February 3 saw Ethereum plunge to a low of $2,160, which has left many traders on edge as they navigate the current market landscape. The options market reflects a complex sentiment surrounding Ethereum's future. While some investors appear cautiously optimistic, there is a strong undercurrent of hedging against potential downturns, evidenced by an increase in put options among larger investors. This strategy suggests a prevailing uncertainty regarding ETH's price direction, particularly as the cryptocurrency trades within a narrow range fluctuating between $2,584 and $2,777. Analysts have indicated that if Ethereum fails to break out soon, it could see a significant drop to its next support level at $2,538. Compounding these technical challenges are broader macroeconomic concerns, particularly ongoing trade tensions between the United States and China, which have raised alarms for investors across all markets. The potential for new import tariffs and geopolitical instability has created a climate of caution, with many traders closely monitoring developments, including a planned meeting between U.S. and Chinese leaders aimed at resolving these disputes. Meanwhile, the emergence of a mysterious transaction involving 500 ETH to a burn address has added a layer of intrigue to the Ethereum narrative. Accompanied by cryptic messages accusing the CEOs of Quanta Investment of employing brain-computer weapons, this incident has not only raised eyebrows but has also spurred a flurry of speculation among traders on social media. The sender, who identified themselves as a Chinese programmer, claimed to be a victim of such technology and expressed intentions to shed light on these accusations. This bizarre twist has led to the creation of a Solana-based Memecoin named after Quanta Investment, which saw a staggering increase of over 460% shortly after its launch. Despite the uncertainty surrounding Ethereum's immediate future, some analysts remain bullish, projecting significant price increases in the coming months. Predictions vary widely, with some experts suggesting ETH could reach as high as $15,000 during the current market cycle. Technical patterns identified by analysts, such as a head and shoulders formation and symmetrical triangles, indicate potential upward momentum if current resistance levels can be broken. The upcoming Pectra upgrade set for April 8 promises to introduce new functionalities that could further stimulate investor interest and confidence. In conclusion, Ethereum's path forward remains fraught with challenges, yet the potential for recovery exists. The coming weeks are critical as ETH navigates crucial support levels and the influence of macroeconomic conditions. Traders and investors should prepare for volatility as market dynamics continue to evolve. Moving forward, the interplay between technical analysis, external factors, and community sentiment will be pivotal in determining whether Ethereum can reclaim its former glory or face further decline. As the U.S. commemorated President's Day, cryptocurrency markets experienced a notable downturn, led by significant declines in Solana, SOL, and XRP. The slump has been attributed to a combination of profit-taking by traders and a general wait for new catalysts to guide market positioning. This decline comes amidst a backdrop of ongoing macroeconomic uncertainties, leaving investors to navigate through a complex landscape of shifting market dynamics. On Monday, February 17, 2025, XRP and SOL both fell approximately 4%, leading losses among major cryptocurrencies. Bitcoin BTC also saw a dip of 1.1%, while BNB Chain's BNB dropped by 0.5%. In contrast, some altcoins like Cardano ADA and Ethereum ETH managed to rise by 2%, indicating a mixed sentiment across the market. The broader CoinDesk 20 index, which tracks the largest tokens by market capitalization, fell by 1.29%, underscoring the prevailing bearish mood. The pressure on SOL is particularly noteworthy as it faced a substantial 9% decline, largely due to its ties with the controversial LibraCoin project. Recently championed by Argentina's President Javier Milei as a means to support small businesses, Libra saw a rapid collapse in value shortly after its introduction, raising concerns among investors and leading to legal scrutiny for its operators. Market analysts suggest that the current price action is largely driven by macroeconomic factors rather than specific developments within the cryptocurrency space. With no significant crypto-specific catalysts in sight, price action appears to be more macro-driven, noted QCP Capital in a broadcast message. The firm highlighted the sustained correlation between Bitcoin and the equities market, with crypto volatility indicators remaining at low levels despite broader economic uncertainties such as tariffs and inflation. Open interest in the options market reflects a cautious stance among traders. Open interest OI represents the number of outstanding options contracts that have not been settled. Recent data shows that OI has not rebounded significantly following January's expiry, indicating that traders are awaiting clearer signals regarding policy changes rather than reacting to mere pro-crypto rhetoric. Institutional interest in Bitcoin remains robust, with many traders favoring it over altcoins despite the latter experiencing declines of 40 to 60% in recent weeks. Jeff May, CEO of the Taiwan-based crypto exchange BTSE, remarked Bitcoin's price has proved to be surprisingly resilient, holding at around $96,000 to $97,000. This is likely because its holder base has shifted towards institutional investors, and this trend is likely to continue. The landscape of cryptocurrency trading is further complicated by speculation surrounding exchange-traded funds ETFs for altcoins like XRP and Dogecoin Doge. The SEC's review of these applications could pave the way for broader institutional adoption, but regulatory hurdles remain a significant concern. Investors are left to ponder the implications of these developments on market prices as they await decisions expected within the next few months. As the cryptocurrency market continues to evolve, the interplay between macroeconomic factors, regulatory developments, and investor sentiment will remain critical. The coming weeks may provide clearer insights as traders and institutions adjust their strategies and positions in response to this dynamic environment. As the market navigates through these turbulent waters, the resilience of Bitcoin amid the broader downturn may set the tone for future trends in the cryptocurrency space.